Okay, we're going to start out today on the stock market analysis with the gold miners. Obviously, there's some movement here. We had some reports come out, and the reports came out with hotter than expected inflation and industrial readings. Retail sales came out hotter than expected. So again, the market continues to trade fundamentally on the fact that it's anticipating the Fed raising interest rates. At least the gold market seems to be doing that. Now, I'm not seeing that in the broad market. The broad market doesn't seem to care, so we'll have to see how that pans out. Let's get into the charts here, starting out with GDX. So GDX obviously gapping down today. The miners are getting, they're getting smacked pretty hard today. So GDX is trading down to this near-term support right here, which was your former low, right down on here on the daily chart. You see it. It's right about 31.40. We're undercutting that area just slightly, and we are putting in a new divergent low, meaning we're, again, divergence is not a reason to necessarily go long. It is just an indication that there is a high likelihood of a trend reversal. So you've got a new divergent low in GDX. Briefly today, undercutting, hitting down around 30.60. We undercut the former low right there. And you can see the divergence is still intact. So see the bullish divergence, how this continues to trend upward. This new low in price is on much higher momentum. So we have continued divergence, bullish divergence in the miners. Where does it stop selling off? It's hard to say. We do have some major support right here at 30. It really is right in this area. We're in the support zone, the major support zone right in here. You can see going back to the GDX chart, this was major resistance from the past. Right there, major resistance there, major resistance here and here. And then once we broke above, it was support. So there's support, support, support. And it was support again. And recently we're coming down into that major support zone again. So technically, as far as I can tell, this still remains the buy zone, the area to buy the miners. We have bullish divergence. We're still, right in that major area of support. And I'm not seeing an indication that we are going to continue to break lower. So I'm looking for us to hold this area with not much more downside in the miners. Gold bullion looks a little bit different. So let's flip over to gold bullion. So gold bullion we've got this uptrend line here on the daily that we've just been walking up. And we recently broke right here a couple weeks ago, recovered it, and today pretty impulsive breakdown again. So not looking necessarily that good in the metal, gold bullion, although the miners are at major support. Gold's starting to break down a little bit. So we'll have to see how that plays out for the miners in general. It definitely does not help the bullish picture to see gold breaking like this. Again, I trade the miners. I don't actually trade gold. It is at some support. You're right here at about 17.55. You can see that is kind of a former area of support right in here. We've held that. That's a level of support we should watch. So if we hold here and continue higher, then we'll see if that continues to remain bullish in the miners. Another thing to point out on gold bullion, you have bullish divergence, and that is we're not making a new low in price. So the bullish divergence really remains intact from back here, where you made a new lower low in price back here, and then a higher low in momentum. And we're continuing to trend upward, although the breakdown today isn't great. We need to see it hold in this area. And if it does, then we're continuing to make higher lows. All right, so there's your former low right here. And if we stop here, that would be a higher low. We'll look for more upside. All right, so moving on. Okay, SPY is so far holding this 50-day moving average area right in here. We're still holding. I need to see a breakdown below that. I talked about that. I left a comment saying I was closing my Q short yesterday, and I did do that. So the reason why is that we're still holding that 50-day moving average. I need to see that break in the SPY before I get more interested in a longer-term short trade in the triple Qs. So again, that was just a quick, 1.5% short trade. It was a positive trade, but for more downside, we need to see some more damage done to the charts, and we're just not seeing it yet. So I need to see that 50-day moving average right now in the SPY that's sitting at about It's sitting at about 442.50. We need to see that break, and if that breaks, we'll likely see a lot more downside coming in the markets. And looking at the FAANG stocks, that's, they're not breaking down quite yet, so you want to see these break as well for more continued downside. So looking at Google, you can see going back on the daily, it's a clear uptrend, and we don't see any real change in that posture. You can see pretty tight trading range right here. It's just kind of grinding higher, and there's no technical change as of today there. So we have big negative divergence that continues to build, but no change in price, no sell signals in Google. So continuing to just watch that one. Microsoft recently held right here. You can see we have this minor support line right here on the daily chart. We recently undercut it the other day, and it was able to hold, and the buyer stepped in and held that support line, and we're bouncing. So no sell signal there on Microsoft. Apple sitting right at the 50-day moving average, but above it, and it's holding so far. So again, on Apple, I keep talking about this level, 144.50. I need to see that break in Apple. A big impulsive breakdown of that level in Apple will likely bring in more selling in the general markets and the triple Qs, but again, we're still holding above it. We're above the 50-day. So no sell signals on the longer time frame. I'm not, I wasn't necessarily looking for a big crash or anything, but I am expecting more downside. I just don't see it yet. So until we see it in the charts, I can't continue to short the triple Qs until I see more damage done to the chart. And right now, we're just not seeing it. Facebook continues to grind within this bearish rising wedge coming off the March 2020 lows. You can see we're just kind of pulling back, but we're still within the wedge. So we need to see a break of that lower support line right down there, this marked in red. And when we see that, we'll have likely a bigger sell signal on our hands in the broader markets. Some of these short trades continue to work. Here's BlackRock. You can see down 2% today. So that one's, it's bouncing off the 100-day moving average. So we're probably going to ping pong between the 100 and the 50-day for a little bit, but I still see more downside in this one. Looking for a minimum. At a very minimum, I think we get down to here, which is the 841, but likely slightly lower. But I think we'll get a reaction there, and then heading down to 792 is the next level of support. So that one's still working. KHC, this one's a long trade. And again, we have bullish divergence. You'll see it. I've got it kind of marked down here. So these new lows that we recently made right in here were divergent lows. We then got a breakout candle. That's your buy signal of this downtrend line right here on the daily chart. And then a couple days of just kind of grinding around, consolidating, back testing. Today, starting to move higher. We'll see, we don't have a definitive breakout. If we look at the hourly chart here, you can see we could probably draw some sort of a trend line like that and maybe wait for a break of that to the upside. We also have a moving average slightly above as well. So we'll want to see a break above that. But looking good so far for a continuation to the upside in this one. And again, this trade is really set up to trade all the way up to gap fill, which is going to be right here at 48.05 on the daily chart. You can see that was a big gap going back here in 2019 of February. So I'd be looking for a bounce and a move up to fill that gap. I like the trade so far. It's looks good technically, and if we're going to gap fill, that's a move of about 30% upside on that one. So looking for that, still looking good there. Here's Starbucks, just kind of hanging in there. It's just not much change from yesterday. I still think there's some more downside. I think we're really set up to move down to this 109.50 in the coming days to weeks, and then down here to 101.20. And ultimately, I think the final target on this is down in this support zone around 94, down to 91.30. So I still like this trade, staying with this one on the short side. Here's Net. Talked about this as a potential short setup, but not an actionable trade. So you have an uptrend line here on the daily chart. Again, you can see we're just kind of bouncing off that support line. So no breakdowns, no sell signals. We need to see a definitive break of this trend line right there. And if we get that, that would be your sell signal. It's set up to do that, but we need to see it. So you've got negative divergence there on the RSI and the PPO with an uptrending price action. Once we get that breakdown, that's going to be your sell signal, and we're likely going to come down pretty impulsively. Nothing yet, though, so we'll just continue to watch that one. PAAS. I want to go back to these miners real quick. Again, the market's trading on the hypothetical solution that the Fed is, or the possible scenario that the Fed's going to hike interest rates. But we have to look at what the Fed's actually going to do, and the Fed has not hiked interest rates. So this could just be temporarily trading action. We'll see. You've got PAAS. You can see we're gapping down today, and intraday it was all the way down here at 24.26. But now you can see we're closing back above that support line, and I'm seeing that across a lot of these different miners. They smashed it down throughout the day, but the buyers are stepping in and recovering those support lines. So that's bullish on the miners. Sometimes the miners will front run the metal. So maybe we'll see the miners start to run to the upside first before the metal actually runs. That can happen sometimes. So I want to point that out. We are still holding that support line. No technical change really. We're moving lower, grinding along this support line, holding support with bullish divergence right there. And we don't have a new divergent low in this, but we are holding that support line. So it still looks bullish to me. It still looks like we're going to break to the upside. When is that gonna take place? Nobody really knows, but I think probably pretty soon. Here's Newmont. I've kind of slightly adjusted this trend line, but I think we're likely holding this support line right here as well. And you can see that we just hit it recently. We bounced off of it. We're coming back down, but still holding it. So that looks good. Bullish divergence. This low today was a new low and a divergent low. So see the momentum, how we still are making a uptrending pattern in momentum. Look here on the RSI as I zoom in. You can see uptrending momentum, higher lows, higher highs. You can see right there. I mean, there's a higher low than before, and here's a higher high than before. So again, it's bullish divergence on the RSI as we continue to kind of make new lows. Still looks like the area to be buying these things. So I'm continuing to add to these positions. Nothing huge. I'm not adding all at once. I'm just kind of nibbling on these shares each and every day that we kind of grind along this support line. I'm kind of building a position over time, building up to a full size position. And then when we start to break to the upside, or if we start to break to the upside, obviously that's still in question. I'll look to probably sell some of that, sell some of those shares into that strength. So here's IM Gold. You can see again today, this is pretty bullish price action, even though it feels bearish with how they open it. Look at what IM Gold did. Sold off, gap down, sold straight down to support. Again, this is former support that we had marked out and bounced right off of that into the moving averages right there. Pretty strong reversal besides the gap, still haven't recovered the gap. So, but a good bounce off of that support line. And you can see that was your downward trend line on the daily chart. We have bullish divergence. So there's your last divergent low, broke out the other few days, came in for a backtest this morning, and we're bouncing off of that. So I'm still thinking we're on our way up in these miners. Here's Agnico Eagle. You can see just tagging the trend line again. So this thing's just been walking down this trend line. I've got it marked here in red. This is coming off your September 2020 highs. And you can see we basically had a big correction, bullish divergence down here. So there's your bullish divergence where it started to show up. It shows up pretty much right in here. And then broke to the upside. But then we've just been grinding along this support line. And we're just tagging that from above. There's support, and again today, hitting that support line. So prices continue to work their way lower along support as we hold the bullish divergences. So yeah, again, I don't know when these are going to rally or bounce, but I think it's going to be pretty impulsive when they do. Likely it's going to be off of some sort of news from the Fed that they're not going to hike interest rates, and then these will probably start to take off to the upside. Not looking good. Some of these don't look as good as others, but technically there's nothing wrong with this chart. It's still holding support while working a downtrend. It is making a slight bullish falling wedge pattern. If I go to the hourly here, you'll see if I mark that out right in here, we've got this slight bullish falling wedge. Not a lot of reaction, so I can't say it's a definitive bullish falling wedge. Maybe we're going to run up, hit that, grind around, and then break. that's all hypothetical, but these are all things that I'm watching. On the hourly, you can see clear bullish divergence right there on the hourly. You see that right there? So we're making higher highs and higher lows in the momentum and yet lower lows in price. So these divergences can last a while. They can build for a while, but ultimately they're indicating that we're about to see a trend reversal in the near future. So that's how I'm playing it. I could be wrong, obviously slightly wrong today in the miners, taking some losses, but it's the name of the game. So we'll just evaluate these in the future. And if they continue to break down, we'll look for a strategy to exit the long positions in these. Otherwise, we're looking for that upside break. Okay, guys, that's all I have for today. So leave me a thumbs up if you guys find some value. Again, I can't get everything right all the time, but we're going to continue to watch these charts, see how things play out, and I will catch you guys on the next video. Bye.